Hello, everyone. Hello. Good evening, everyone. Okay, we can start with the class. Good evening, everyone. Can you guys hear me? Hello, can you hear me?
Yes, we can hear you, sir.
Okay. Right, so let's start with the class. We're going to do our last topic for test 2 preparation. So on Saturday, we'll be doing a revision for test 2. Right, so let's look at this last topic for test 2. Right, process costing is a very straightforward and simple topic, but we need to understand it to maximize our marks in the test. Right, so when we talk of process costing, we are looking at a process which produce large number of identical products, and this number of identical products will consume the same cost. So which means in the process, the raw material is fed into the process and the labor. So the cost of the process is going to be identical to each product that is going to be manufactured. So what it means then is when you are calculating the cost of the product, then you need the process cost over number of units produced. So that is going to be the cost per unit. So that's process costing, which means the process will cost a full amount for the process. Then at the end of the process, then you need to determine how many units were produced. Then you can get the cost per unit. So that's basically process costing. You can see here they say is a system used to determine the cost of a large number of identical products produced in a continuous process. Each unit consumes an identical amount of variable and fixed cost. So which means it's easy to calculate per unit because they consume an identical amount of variable and fixed cost. So when you calculate per unit, then you just need the full process cost. Then you divide by the number of units that were produced. So that's here, unit cost is equal total cost over number of units. So that is going to be the unit cost. So in process costing, this is the flow of cost in a simple process costing. We have direct material, direct labor, and manufacturing overheads. Direct material and manufacturing overheads are going to be conversion cost. So which means these are used to convert this material into the products. So in your question, you should be able to differentiate between conversion cost and the material. So conversion costs are going to be direct labor and manufacturing overheads. So at the end, we will have a batch of identical units of product. So in our costing now, we will need the cost of labor, manufacturing overhead, and the material. Then we compare with the number of units that were produced by the process. So we're going to get the cost per unit. So let's look at calculations in a process costing. Right, so since we have already talked about process costing, we use it to calculate the unit cost of the product produced during the period. So which means we want the unit cost so that we can be able to charge we can be able to make a markup on the product. Once we have a unit cost, remember these products are identical. So once we have a unit cost, then that's the cost of all the products. So we can just mark up that one product, then it's going to be the selling price for those products. So in our process costing, we'll be required to, mostly in your questions, you should be able to do the statement of equivalent production. In the statement of equivalent production, you are calculating the units produced. So which means here you are calculating the units that were produced. That's the statement of equivalent production. I will explain this equivalent. Then there is also the unit cost. This is now when you say the process cost over number of units. So that is going to be your unit cost. Then we should be able to do the production cost statement. A production cost statement is just converting this statement of equivalent unit into monetary term. That's the production cost statement, which means you are now going to come to this statement of equivalent production. All the units that are there, remember here we'll have on the statement of equivalent production, we'll have finished goods. We'll have finished goods. Then we'll have normal loss. Then we'll also have work in progress. So your statement of production cost should only have the cost of these finished goods, the normal loss. Remember, a normal loss in a process costing is part of the product. If something is a normal loss, it means we can be able to sell that product. Those are the defects that you can sell at a low price. So those are the normal loss in the process. You will see even when you are in the production of even chickens, you will see at the end of the production that there are certain chickens which are not good. So those goes to normal loss, but you can still sell them to get something out of them. So which means your production cost statement is going to be made up of finished goods, normal loss, and the work in progress. So that's the production cost statement. Right, so whilst we are in the statement of equivalent production, when we talk of equivalent production, you will find that in the process, by the end of the process, there will be finished goods. That's finished goods in the process. Then there is going to be work in process or progress. So this work in progress, sometimes you might find that they say it's 40% complete. So if a work in progress is 40% complete, what it means is if it is 200 units which are 40% complete, then it means you need to find the equivalent production, which means if it is 40% complete, the equivalent production you are going to multiply by the percentage of completion. Then this is going to give you equivalent units. So that's basically the statement of equivalent production. So which means in the statement of equivalent production, we'll have finished and work in process. And when you convert, because remember here we want the unit cost. When we convert, we need to see the work in progress. What was the progress? Is 40% progress. So we convert that one to equivalent units. So that's another area that you need to look at. Then, but you will see when you do the question, I think it's going to illustrate more when we look at the question. Right, so let's look at the unit cost. This one is straightforward. So we are now going to have the average cost of producing 1 unit, which means the process cost over number of units produced is going to give you the unit cost. So that's basically there. Right, I think I've already explained them, but they are also explained here. Let's just look at, maybe I was just using my own understanding. Let's look at what they are saying here. Right, so here they say production cost statement. We're still going. It reconciles the cost allocated to units during the period with the cost of production during the period. So which means here we are looking at the cost allocated to units with the cost of production during the period. So in your production cost statement, you are going to look at the cost of finished goods and the cost of work in progress and the cost of normal loss. So this is what makes up your production cost statement. So which means you just come and multiply the cost of finished goods, the work in progress, and the normal loss. Then you are going to have your total production cost. So that's basically how you do your production cost. This is statement of equivalent production. I think we'll look at the question. Then there's also work in progress or process. These are partially completed units and are referred to as work in progress. So what I was trying to say is they are converted to fully equivalent units using the percentage of completion. For an example, if we have 5,000 liters of Coca-Cola that have gone through 30% of the process, then equivalent unit is going to be 1,500. These are equivalent to completed units. So which means when you do your production cost statement, you are now focusing on these equivalent to completed units. So that's basically how you treat your work in progress when you do your production cost statement, which means you are going to look at the equivalent units and the cost per equivalent unit. Then you take that to the production cost statement. Right, then there's another part which is opening work in progress. Remember, we have closing and opening. Right, this is going to be what we bring from last year. I think this is where one of the trick part of this topic is. We should look at this. When we have opening work in progress, if reached the wastage point in the previous process, don't use it in calculating the normal loss. So what it means here is, if in your question they give you opening work in progress and they say it was 60% complete, right? If it is 60% complete from last year and the wastage point or the inspection point if they say the wastage point is 80%, so if the wastage point is 80%, and you brought in this from last year, which was 60% complete. So what it means now is it was brought in before it reached the wastage point or the inspection point, because you can only identify a normal loss to a product that has reached the inspection point. So if something has not reached the inspection point, you cannot be able to determine the loss on that particular product. So since this was 60% complete from the previous process, and the wastage point or inspection point is 80%, it means it has not gone through the normal loss calculation from previous year. So during this current year, you are going to use it to calculate the normal loss. That's a very key area that you guys should look. So if the wastage point, let's say, was, let me just say the wastage point here was 40%. What it means, this, which was 60% complete, has gone through this wastage point. So which means when you calculate your normal loss for this year, you are not going to include it because it has already been included in calculating the normal loss for previous year. I think that's the basic principle that we should be able to pick when it comes to opening work in progress and closing work in progress. I think I will also explain more when we do the question. But these are the basic principles that we should, when we are answering the question for process costing, we should be able to apply those principles. Then there is also this thing of FIFO, weighted average. Right, when you are using FIFO, FIFO is for first in, first out. Right, so if FIFO is first in, first out, what it means is in FIFO, you only account for only those units started during the period. Those are the ones that you are going to account when you are doing your production cost statement. It means you only take those which were started during the period. That is when you are using FIFO. And when you are using weighted average, which means we are going to merge opening with the new units that were started. So that's the difference between the FIFO method and the weighted average method. Remember, when we do the weighted average, we say opening plus current units. If we want to find the average price, then we say plus current units over number of units. So that's the difference now with first in, first out. First in, first out, we cost them based on who comes first. The first batch is going to have its price. The second batch its price. But when we go to the weighted average method, you will see that we will use an average price. That's why they call it a weighted average, because we are going to use an average price here. But in, first out, it means you just focus on who comes first. So who comes first is the one who goes first. So that's the first in, first out. But you will see when we do the question. Right, then we also have losses and gains in the process. We have two losses. Abnormal loss, this is what we expect. We expect to have a normal loss of 10%. That one is expected. And abnormal loss is not expected. Remember when we started, I said these normal loss mostly are defects or products with slight problems that can still be sold at a lower price. Those goes to the normal loss. So in that case, it means normal loss is going to be part of the production cost. But when we go to abnormal loss, you will see that abnormal loss will now be what we don't expect in the process. So in that case, abnormal losses will be expensed in the profit and loss. Abnormal loss, we expense them in the profit and loss. So they are going to be expenses. So if you have an abnormal loss in your calculation, I think we're going to see how do we determine an abnormal loss. Then it means you take it as an expense in the profit and loss account. So that's how we treat the two. This one will go as a production cost. Right. I want us to look at this question. I think everything is going to be easy when we look at a question. Right, so let's look at this question. The sales details relating to KLM Limited's production during January. There is opening work in progress. Remember what I was saying about this is 40% complete. 1,000 units, which are 40% complete. Then those which were started during the period is 10,000. Anticipated normal loss, 10%, allocated on the relative number of units. The inspection point, right? This is a key figure in our process costing, the inspection point. Right, if you check, the inspection point is 80%, which means these guys will do an inspection to determine the loss at this stage of the process. So if they are going to do at 80% completion, you can see here, this opening work in progress was 40% complete when it was brought from last year. So what it means, when it was brought from last year, it did not reach the inspection point. So if it did not reach the inspection point from last year, then it also means that it was not used in the calculation for normal loss last year. So what are you going to do now this year? You now use it in the calculation for normal loss because it was not used in the calculation for normal loss for last year. So that's basically what you look at. And when you go to closing work in progress, you look at the percentage of completion, especially when you are calculating your normal loss. What is the percentage of completion of the work in progress? Is 60%. Did it reach the inspection point? No. So which means when you calculate your normal loss, you are not going to include these units, the work in progress, because they did not reach the inspection point. Remember, we say inspection point, this is where you can determine the loss. So if something has not reached that point, then it means you cannot be able to determine a loss from it. So these are 1, 2, 3, 4 that will make up your question for process costing. Understand how do you treat opening work in progress. Understand how do you treat normal losses. When do you determine normal loss, and understand how to use this inspection point. So which means if you understand this 1, 2, 3, 4, then you are done with process costing. This is the only area that can confuse. Right, so there were 8,100 units which were completed. And always remember here, when you have closing work in progress, which is 60% complete, equivalent units is not going to be 2,000 because it's 60% complete. Equivalent units is going to be times 60%. So that is going to be the equivalent unit. So which means this part in your question, you use it to calculate the equivalent production cost, which means we are dealing with units here. So the equivalent production is going to be units. Then when you go to the production cost now, that's when you come here and look at this cost. What were the costs? There was direct material. So from your units here that you've calculated in the equivalent units, then you can now be able to calculate the cost per unit here, because these are the direct material that was fed into the process and the direct labor that was used. So which means all the units that you have produced now, we are just going to divide by the cost of production. Then you can get your cost per unit. So that's basically how we answer this question. But I will emphasize on here, closing work in progress, inspection point, anticipated normal loss, and opening work. If you can be able to understand these, I think that's where most of the challenge will be when we are answering the question. Right, so let's look at what do they want us to do. They say assume that KLM Limited uses the FIFO method to value its inventory. They use the FIFO method in our first question. Draw up the following statement. The equivalent production. Remember, in the equivalent production, we are going to calculate the number of units, equivalent units that were produced. But they are using FIFO. They are using FIFO. So we come here and say equivalent. So that is going to be our one. The equivalent production statement. Right. So your equivalent production statement will have inputs units. Then we will have output. So in the output units, we will have the total. Then we'll have the material. Then we'll have conversion. Right, so that's there. Right, so let's start to look at what do we do. These guys, they are using the FIFO. We are using FIFO. So let's start with the opening work in progress. There is opening work in progress of 1,000 units. Opening work in progress. Is 1,000 units. Right, so we have 1,000 units of opening work in progress. But if you check this opening work in progress, when they come, they were 40% complete. But as we are using FIFO, so when we are using FIFO, what it means is we need to separate them in our output units. We have to separate them. Remember, we're using FIFO. So which means we are going to have a normal loss for this separately. So it's going to be, remember we say it's now going to come to be used to, because it did not reach the inspection point in the previous year. So in this current year, we are going to have a normal loss on it. So which means we are now going to have, here we are going to have a normal loss of 10%, which is 1,000 times 90%. How much are we going to have? We're going to have 900 here. Then when it comes to material, remember it was brought from last year. So material cannot be carried forward. Once the material is fed into the process at the start of the process, then it means you have already used the material. What is left here on this is conversion cost. So in your conversion cost now, you look at the percentage of that need to be completed. Remember, this was brought in from last year. So which means we want to look at what need to be completed. So what need to be completed now is how many percentage do we need to complete this opening work in progress? How many percentage do you guys do we need to complete this opening work in progress? Anyone who can figure out from what we have been doing? Sorry, I can't hear you. You have, can you speak up?
60%.
Yes, we are going to use 60% because it came while it was already 40% complete. So conversion cost for this year is going to be 60%. So you multiply to get your equivalent, you multiply by 60%. 900 times 60%, which is going to give us 540 here. So that is going to be the opening work in progress. Then you go to started during the year. We started 10,000 units. So we take those 10,000 units. So we have those which were started during the year. So it's going to be 10,000 units. Then we should have the started and completed. Started and completed. Here we want those which were started and completed. All in all, how many units were completed? 8,100 units were completed. But remember, we are using FIFO. So we cannot combine all of them because we are using FIFO here. Already, we have already separated the 900. So which means the started and completed, we should now subtract from the total that was completed, which is 8,100. We are now going to subtract. So which means here we're going to subtract 8,100 minus 900. Those are the ones that were started during the year. Remember, we're using FIFO and completed. So how many are we going to have there on the started and completed? Is 8,100 100 minus 900. We are going to have 7,200 here. And they are saying completed. So which means they are complete in material. So you don't have to multiply by n%, because they are complete in everything here. So you don't need to multiply, to convert, because they were completed. So which means everywhere they're 100% complete. They're 100% complete. Right. Then after we have these started and completed, what do we do next now? Anyone with an idea from what we have just said? What do? We have our started and completed. An idea? What do? We have the started and completed. Once you have your started and completed, the next thing is to calculate your normal loss. So which means you need to calculate your normal loss here. Right, when we are calculating our normal loss, we come here and look at what is.
Now we need to go to the
closing work in progress. Do you see that it was 60% complete and the inspection point is 80%? So you can see we cannot use this closing work in progress to calculate our normal loss. So when we calculate our normal loss, we need to take out this closing work in progress. So that's the only, and we look at the percentage of the normal loss, which is 10%. So we only have to take out the work in progress. The reason being that it did not reach the inspection point. You cannot determine a loss for something that has not reached the inspection point. So which means when we calculate the normal loss, we take out the closing work in progress. So we just come here and say, in the calculation for the normal loss, we are going to say we have 1,000 units, closing normal loss plus 10,000 units minus 2,000 units times 10%. How much are we going to get in the normal loss? Anyone who got the answer? 1,000 plus 10,000 minus 2,000 times 10%. Are you guys telling me that you can't get the answer for this one, or you're just quiet?
I'm getting 900.
Guys, you don't have to be quiet like this. It won't be a class now. If people are quiet like this on online class, then to me, I will say, I'll just record a recording and send to you, because it's the same. Because if people are not participating, why should we have a live online class? We just give them a recording, right? We should have questions. We should have participation. People should ask questions where they don't understand. That's why we make it a live online class, right? So we have our normal loss of 900, right? In terms of material, obvious, it's already, remember material, once it's fed into the process, it's 100%. So which means in terms of material, it's going to be 100% complete. We put in the material, 100% of the material into the process. So which means it's going to be 100%. Then on the conversion cost, remember we're dealing with a normal loss. This is a normal loss that you are dealing with. So when we were determining the normal loss, we say we can only take those which has reached the inspection point. So 900 units are the ones that has reached the inspection point. So our inspection point is 80%. So which means our equivalent units, we are now going to multiply by the inspection point percentage. So which means it's going to be 900 times 80% here. How much are we going to have if we multiply 900 by times 80%?
720.
So we're going to have 720. So what you should look here is the normal loss equivalent. Remember, we can only determine normal loss of those products which has reached the inspection point. So the equivalent must be the inspection point percentage. That will be the equivalent units, because we can only determine the normal loss for only the products that has reached the inspection point. So which means when you calculate your equivalent units, you use the inspection point percentage. So that's there. Right. When you have your normal loss, you are going to have closing work in progress. So our closing work in progress, I saw this one that on last year's test 2, I think it's the one that we're going to do. Is there this question for process costing on test 2? Right, so we want the closing work in progress. The closing work in progress is going to be 2,000, which is 60% complete. 2,000, which is 60% complete. So when you come here, your total is going to be 2,000. Material is complete, because there is no way the material can be half when you feed them. When we start the process, we put all the material that is needed. So which means in terms of material, it's 100%. So we want now the equivalent, which is now 60% complete. So which means we're now going to multiply 2,000 times 60%, which is going to be how much? 1,200 here. Right, then the last thing is we have closing work in progress. What is left here as per our question? On the quantity statement, I think we have included everything. Right, what you should now look at now is you should now look at the total. The total for here is 11,000. So we should have our total. That is 11. The total for this and this side must balance. This line, these two, they must balance. We must have 11,000 here. So if they don't balance these two total, we have, that's how you calculate your abnormal loss. So if we add this side and they don't balance, then the difference now is going to be the abnormal loss. Let's add and see if they balance. So which means we have 900 plus they are balancing, which means there is no abnormal loss. if there is, you can have an abnormal loss or gain here. So which means if this total is less than this one, then it's going to be an abnormal loss. If this total is more than this one, then it's going to be an abnormal gain. So you know where to take them. Abnormal gain will increase your revenue. Abnormal loss will increase your expenses. Right, so let's now calculate the total for these two lines, here and here. So here we're going to have 10,100, and in the last quarter we're going to have 540, 7,200, 720, 1,200. So here we're going to have 9,660. So we'll be done with our quantity statement. I don't know if there's anyone with a question on this quantity statement. We'll be done with the quantity statement. In your MAC, sorry, in your MAC 2601, we call it quantity. Here we call it equivalent production statement. So I'm still referring to, because this topic is more on 2601. So that's why I'm still using the terms for 2601. Because in 2601, we call it a quantity statement. So here they call it equivalent production statement. So that's how you produce your equivalent production statement. Any question before we go to the next part of the question? Anyone with a question?
Sir,
Yes.
can you please explain why didn't we have the 100% on the material for opening work in progress? I think
Okay.
I missed that one.
Why don't we have the 100% on the, because it was used in the previous process. Remember, in the previous period. So we cannot have that material anymore. Because if you check, the question says, opening work in progress, which was 40% complete, which means in terms of material, it was already fed in the previous process. So in the current process, we are only going to complete the remaining. So that's why here we don't have a percentage of completion, because the material percentage of completion was done in the previous period.
Okay, thank you.
You can also, let me check something that also can help. Let me just, right, do you see here? What I'm trying to say here is, we have this closing work in progress, which is 2,000. I think this can help. And if you check here, in terms of material, it is 100% complete. So when you carry it to the following year, you cannot also carry this 2,000, because you have already have 100% complete in this period. So when you carry it to the next year, it should not be also involved in your calculation, because already 100% is here. So that's basically how we treat that part. Anyone with another question before we do the next part? Okay, if there is no question, let's look at what are we supposed to do. We are going to do the unit cost using FIFO. Remember, when we started, we say when you are using FIFO, you only use the current cost. So let's do the unit cost using FIFO, first in, first out. Right, these are our units. And remember, in the quantity statement, we will be doing units. So which means here we have units and we want the unit cost. What do? We want the unit cost. Already we have our quantity here and we want the unit cost, which means we go to our question. Remember, we are using FIFO. So which means when you are using FIFO, you are not going to include your opening work in progress. You are going to use cost incurred during the current period. We are using FIFO, first in, first out. Remember, even when we're doing our direct and absorption costing, we say when we are using FIFO in inventory valuation, we don't include these opening work, closing, opening in inventories. The same applies to here. So it's still the same principle, which means we are going to use cost incurred during the period. So we're going to use this direct material and direct labor and direct labor and manufacturing overhead cost. So which means we go to our column and take 34,500 and 142,400. So in terms of material, we have 34,500. Then in conversion, we say we have 142,400. Right, so the cost per unit is easier now. We just divide by, so what is going to be the total if we add 34,500 and 142,500, 400 plus 34,
It's 176,900.
it's going to give us 176,900. Right, when we have this 176,900, the most important thing here is you need to calculate this too, because sometimes you may find that so what is going to be the cost of material? So which means we divide 10,100 into 34,500. That's the cost per unit in terms of material. So it's going to be 34,500 divided by 10,100. How much are we going to have there? 3.415. We can make it 3.4158. So we can make it 6. These are units, remember, and this is money. So which means we want the cost per unit. We just come here and say 34,500 divided by 10,100. Then we get our cost per unit. The same applies to here. These are the units. We divide these units into this cost. Then we get the cost per unit. So it's going to be 142,400 divided by 9,660. So this one is now going to give you 14.741. So it's going to be 14.741. So that is here. When you have these two, conversion and material, you add them to get the total unit cost. So which means we're going to add 3.416. Then we have a total of 18 point. This network is just something else. It's the network that kicked me out. Right, so I think you guys, you can hear me, né? Are we still together?
Yes, sir.
Yes.
Okay. Right, so here I was saying the network just kicked me out. So we're going to add the total here. Remember, this column is for our total column. So we add 3.416 plus 14.741. Then we'll have 18.157 here. Right, so that is going to be our unit cost. So which means when we sell, the total unit cost is going to be 18.157. That is going to be the unit cost. Right. Unless if there is a question, then we can do the next part, which is the production cost statement. So our 3 is going to be the production cost. This one, remember, we say the production cost statement is a bit easier. Once you manage to do your unit cost and equivalent cost, this one is going to be easy. So in your production cost statement, you just need to look at finished goods. Who are those finished goods? So in your finished goods, you look at, remember here we're looking at the cost. So you look at opening, work in progress. You are going to look at your opening work in progress, which is here. We have direct material and direct labor and manufacturing overheads. So that is going to be your opening work in progress, which is 4,000 plus 6,000. It's going to be the opening work in progress. So it's going to be 4,000 plus 6,000. That is going to be your opening work in progress, which is going to give you 10,000. Yup, this network is just. Gosh, my network. Right, so I was saying, so we have the opening work in progress. Then what else do we need in the finished goods? We need the material. We need the material that is completed, 7,200. So when you calculate your material, remember here we're going to take material and conversion. So which means you separate them. Your material, you are going to use this material cost per unit. Then when you calculate your conversion, you use this conversion cost per unit. Right. So that's basically how you calculate your material. So which means you come here and say material. So your material is going to be completed is 7,200 times the cost of material per unit, which is 3.416. So that is going to be your material cost. How much are we going to have as our material cost? It's going to be 7,200 times 3.416. So it's going to be 24,595.20. 24,595.20. So that is going to be your material. Then you look at conversion cost. So your next is going to be your conversion. So in your conversion, you look at 7,200 units that were produced, plus how many were equivalent. On conversions, we have 7,200 for opening plus here. So which means we are going to have 7,200 plus 540 times 14.741. 14.741. How much are we going to have there? If we multiply, the first thing is to add the units, which is 7,200. 7,200 plus 540 times 14.741. So we're going to have 114. So it's going to be 114.34. So that is going to be your conversion. Then you need your normal loss. You need your normal loss. The normal loss will also be part of the production cost statement. So you come and take your normal loss. So in normal loss, you take when you take your material and conversion. So which means you need the material and the conversion. What is our normal loss in terms of quantity? Then we multiply by. So the normal loss is this line. So in terms of material is 900 and conversion is 720. So we take those figures. So it's going to be, in terms of material, our normal loss is 900 times the material is this price times 3.416. Then in terms of conversion, we say how many units do we have? We have 720. 720. So it's going to be 720 times 14.741. So that is going to be your conversion cost, your normal loss. So we multiply the figures. Then how much are we going to have when we multiply the materials?
It's 3,074 and 40.
3,074.40. Then conversion cost, how much are we going to have here? We multiply 720 by 14.741. It's going to be 10. Right? Then that's your normal loss. Then you go to closing work in progress. So you also take the material and conversion. So that's your cost of production. So which means at the end here, we need, what was the closing work in progress in terms of material? It's 2,000 and in terms of conversion is 1,200. So we convert those one to money. So which means this one is going to be 2,000 times 2,000 times 3 rand 416. Then this one we say is 1,200 times 14.741. Right, so we need those figures. How much are we going to have? 2,000 times 3.416
6832.
6832. Then here is the same. We just multiply there. It's 1,200 times 14,741. It's going to be 17,689.20. Right. So when you are done with all these calculations, I think we will not do that. You add everything here. So that is going to be your production cost. So you need your total production cost. So you just add all these figures, then you get your total production cost. That is going to be, if you add all of them from the top, then you get your total production cost. Let's quickly go to the weighted average, unless if there's someone with a question. Let's quickly go to the weighted average so that we can spot the difference. I just want us to spot the difference. The difference with the weighted average is that it comes here. When you are dealing with your weighted average, then it means you are not going to have opening work in progress like this. You just have to combine them. So that's the only difference when you are dealing with the weighted average. You're not going to separate. Remember, in first in, first out, each one is going to have a separate column. So when we do the weighted average, you are not going to have a line here. So let's quickly do that and see. Hello? Sorry, I'm having a class now. I'll call you after my class now. Yes. Right, so let's do the weighted average. So that is going to be number 2, the equivalent using weighted average. So let's look at the difference now between the two methods. When the question requires you to use the weighted average, so here it's going to be inputs, and output units. Then we'll have our total material conversion. Right, so we have our opening work in progress. And those which were started, we already have these figures. So opening is 1,000, started is 10,000. Right, so we don't have these because they are going to be combined. And we are no more going to say started and completed. We are just going to say completed here. We are not going to say started and completed. We are going to say completed. So based on our question, we check all the units that were completed when we are using the weighted average. That's the only difference. So you are not going to have started and completed, opening work in progress. You are only going to have one figure. So which means here we check all which were started and completed, which is 8,100 units here. So those are the ones that were completed. We no longer say started and completed, sorry. We're going to take the full amount of what was completed. So which means it's going to be 8,100, 8,100, and it's completed in all areas. So it's going to be 8,100 again here. So that's the difference between the FIFO and the weighted average. So which means here you don't need to stress yourself by having those opening work in progress coming to this line. They are going to be here. They are all going to be here. So after you are done with this part, the next thing that you need to do now is we have our completed. So which means you just need to calculate your normal loss. We just need to calculate our normal loss. Yes, and you can ask. I see there's someone who raised it. Yes. Hello?
Can you hear me?
Yes, I can hear you now.
Yes. I need to ask, why do we have this under opening work in progress?
Is there anyone who got the principle who can answer it first? Then I'll answer. Is there anyone who understands why don't we have figures here on opening work in progress? Anyone who understood the question, the principle behind here? Is there anyone? Okay, if there is no one, let me repeat it. The reason why we don't have figures here, we say we are using the weighted average method. So when we are using the weighted average method, we combine everything. So in simple terms, let me just say, in the average method, we combine everything comes here. But when we are using the FIFO, you will see that we'll have the line for first in, first out, and the line for current. So when we are using the weighted average, we are not going to have those. We just combine everything under one line. Opening and closing. So the opening and current will have one line here. So that's why we did not put anything here. Right, I don't know if she's you are answered there or you got it. Did you get the answer?
Yes, thanks.
Okay, so that's basically, so when you are doing, always look at I'm using weighted average, I'm using FIFO. So if you are using weighted average, always know that completed units will be combined, opening and the current ones. But when you are using them first in, first out, you could see here when we're using the first in, first out that we had to separate them. You can see here we separated them, started and completed and opening, they were separated. So that's basically what you guys should look at when you are answering a question. Which valuation method am I supposed to use? Right, so the normal loss is still going to be the same. I don't think anything can change. We're going to have 1,000 plus 10,000 minus 2,000 times 10%. So we got 900 on the normal loss here in our previous calculation. Then we got 900 here. Then we got 720 here. Then your closing work in progress still. So what is only different is only this line. The rest is the same. Closing work in progress is the same. So which means we have closing work in progress of 2,000 in terms of material 2,000. It was 60% complete. Then we multiply by 60%. Then we get our 1,200 here. Right, then we don't have an abnormal loss. Let's just check. So it's going to be okay. So here is 11,000. We must get 11,000 here so that we determine that we don't have abnormal loss. So it's going to be 8,100 plus 900 plus 2,000. So it's still 11,000. So which means we don't have abnormal loss. If there is a difference between this figure and this figure, if this one is more than here, the balancing figure will be abnormal loss. If this is bigger than this one, the balancing figure will be abnormal gain. Right, so that's there. So we now come and add the other columns. How much are we going to have on material? Still the same figures here, so it's gonna give us 11,000 here. 2, 2, 2, yes. Then the last column is going to be how much?
$10,020.
That's the last column. So these are the quantities that we have. The quantities. So the cost per unit, the cost per unit, that's another thing that we should look at. Let's just check it. Remember when we were using FIFO, we said when we are using FIFO, the cost per unit, we use the current production. Now we are using weighted average. So in our cost per unit calculation, remember when we are using the weighted average, we combine opening and current year's production when we are using the weighted average. So which means here, we come here to our question and check, we are using the weighted average. So you come here, instead of using the current cost, then it means when we are using the weighted average, when we value we are going to use this full cost, which means we're going to use opening work in progress and cost incurred during the current year. So that's another difference between FIFO and weighted average. So which means you should always look out for that. When you are using the weighted average, you use the opening and current cost. So which means we come here. Already we have opening, we say it's 4 plus So it's going to be our total is going to be, here we have material is 4,000. Let me put it properly. So we have opening, in terms of material we have 4,000. In terms of conversion we have 6,000. All in all is 10,000. Then we have current production, current cost. Current costs, we can take them here. Material, we say 34,500. Then here we say it's terms of material. Here we say 142,400. So it's going to be 142,400. Right. So when we have this, then it means we just need the totals here. We need the totals here. What is going to be the total for material? It's going to be 4,000 plus 4,000 is 38,500. Then here is 6,000. It's going to be 148,400. Right, so that's there. So when we have our total cost, then we want the unit cost. So we are now going to divide by the total quantities to get the unit cost. So our unit cost is going to be we just come here. How many quantities are we having? We have here we have 11,000. Then here we have 10,020. So we are just going to divide here by 11,000. We divide here by 11,000, here by 10,020. Then we can get our unit cost. So we're going to have 38,500 divided by 11,000. So this one is going to give us 3.5. Then we have 148,400. Then we divide by 10,020. So the second one is going to give us 14.81. This one is going to be 14.81. So these are your unit costs. We can add them to get the total, that is plus 3.5, which is going to be 18.31. That is the total unit cost. Right. Anyone with a question before we go to the next part, which is the production cost statement, the last part? Is there anyone with a question before we do the production cost statement? Then we will do now the production cost. Production cost statement is only about converting those quantities into money. Production cost statement, it's not going to be much different from what we have done, but let's just do it since we still have time. Right, so the only difference that you are going to see is here in the production cost statement here, we are going to take into account the completed, which is 8,100. Those are the goods that were completed. So which is going to be our completed goods. We have finished goods. Then we have those which were completed, which is 8,100 times the cost per unit, which is going to be times 18.31. That's our cost here per unit, 18.31. So it's going to be times 18.31. That is going to be our completed. Then when you have your completed, then you take your normal loss. Your normal loss, you are going to look at material and conversion. Material and conversion. The same applies to how we did it. Material and conversion. So which means you are going to what is the normal loss in terms of material is 900, 720 for conversion. So you are going to multiply by the unit cost, which is for material is 900 times 3.5. Then for conversion, we say it's 720 times 14.81. So this one is going to be 720 times 14.81. So that is going to be your normal loss. Then you go and take also the closing work in progress. So your closing work in progress is also going to take the normal loss, the materials, and conversion. So it's going to be material and conversion. What was the material that was under closing work in progress? The material under closing work in progress is 2,000. Then the conversion is 1,200. So it's going to be material is 2,000 times the material cost per unit, which is 3.5. Then conversion is going to be 1,200 times 14.81. Right. So when you are done, when you have all the totals for here, so which means you are going to add your finished goods total. You need a total for finished goods. Then you add it with the total for normal loss. Then your normal loss total, you add with the total for closing inventory. Then that is going to be your production cost. I don't know if there's anyone with a question. Before we close the class, is there anyone with a question on this topic? You guys, do you have any questions on this topic? So that's how we do this question. You see how long it becomes. It's a small information, but it becomes long. So what is important for you guys, like I said before, understand this part. Opening, work in progress, 40% complete. Started, anticipated normal losses, 10%. So what you should know, how do I treat this opening work in progress when I am calculating my normal loss? Since it did not reach the inspection point from the previous year, then it means in the current year, you are going to use it to calculate your normal loss. Then when you go to the closing work in progress, since it did not reach the inspection point, when you calculate your normal loss, you don't include it because it did not reach the inspection point. Yes, you can ask. Hello, you can ask. I see someone raising the hand. You can ask.
Yes, it's me, sir. I wanted to ask that this topic, what is the difference with this topic of in this third level and the 2601? What is the difference
On
between
this
this topic
topic,
and the one, yes, and the one of second level? Thanks.
or the difference, there is no much.
Yes,
There
the
is no.
difference.
There is no much difference. The treatment is still the same. The principle is still the same. But you can only see that some of the terms are now used differently here. And the other thing is in 2601, they put a lot of information. They split it into a lot of topics just to split. That's the only difference. You will see when you go to 2601, you will see that there is a topic for equivalent production. There is a topic for unity cost. There is a topic for, I think that's the only difference. But as far as the principle is concerned, the principle is still the same because the main principle for the topic is here. So the principle is still the same. There is no much difference there.
Okay, yes, thank you. I think the 2601 for me, I think is on a study guide, they explain much better and as well as the examples there. If
Yeah.
maybe we can start on go back to 2601 and then come back here, I think we'll be fine.
Yeah, that's the thing again. Remember when you are doing MAC, let me just say it again. When you are doing MAC at third level, you should first understand the topic from second level. Because remember at third level, they assume that some of the things you know them, they won't even include them in the start guide for third level. Because that's why sometimes you see they will be referring you to second level. So some of the information will, so if you feel the topic is giving you problem, try to go back to 2601. Then when you come to 3761, then you have an idea because there they explain more. That's true, which means when you are studying your MAC, don't lose your old study guides. Those even when you are doing finance, the 2602 explain better than the third level because they assume they are you are from scratch. But when we are in third level, they assume that you have a background. So that's basically true, Joseph. You should go back to 2601.
Yes, sir.
So that if you
Got it.
want a detailed analysis of the topic, you go back to if you check MAC 2601 is the most important foundation. If you have not mastered 2601, then you are going to have a problem with MAC. When I look at 2601, someone who mastered 2601, if you give him a 3761 question paper, that person, if he is good enough, he can still get something. Because MAC is the only difference with the MAC now is 3761, they don't put topics by topic like what we do in 2601. They put all the topic under one question. So that's the only thing. But if you look, absorption costing will never change because you are doing 3761. The way we did it in 2601 is still the same. It will not change. So that's the other thing. So we should always try to refer back to our second year modules when we are doing some of the stuff. Unless if there's anyone with a question, then we can close the class for today, unless there's another question. Right, if there is no question, then I will say on our Saturday class, we are going to do